Good morning. Today is December 20th, 2018. My name is Olawale Okibola, Spartacus Trading Corporation, here to bring you a quick and dirty pre-market analysis ahead of today's New York Pit Open. It's approximately 7 o'clock a.m. Eastern Standard Time. Um, let's go to the profiles real quickly. I'm not going to, I did a recap yesterday, so for any questions, please refer to that recap from yesterday. Looking at the market, pre-market, overnight, uh, market trade lower. I mean, you can see what's going on. Trade lower and has since traded higher. Okay, I talked about this high volume from yesterday. Refer to yesterday's video, and so the market responded with a sale, or early on we breached, sold off. Now we sold off or attempted to sell off from there. We breach. So the question is, are these buyers or sellers with that high volume? We shall soon find out. We know what their reaction will be. If they are buyers, the market trades lower. They're going to have to cover. That's in the market's lower. If they are sellers, markets trade higher. They're going to have to cover. And, again, the spike rule comes into play. So far, the spike rules are, if price is being accepted back within the spike, that means, more than likely, since the spike is lower, the trade could be lower. Nevertheless, value would be clearly lower from yesterday's value area. If prices are accepted above the spike base, that means that prices are rejected lower, and we could possibly trade higher. Um, but be aware that we have, if that's the case, if value is being accepted here, all you have is unchanged value, so you can have some rotation. We do have a rally high that you want to pay attention to, but that's targets to the upside. Now to the downside, other than yesterday's low, which is the current monthly low, and the overnight low, if we get below the overnight low, let's go to the bar charts to try to find some downside references so we're prepared for today's trade. So um, you can tag the overnight low, and you can tag yesterday's low, which is also a monthly low. Change this up so I see it but don't see it. I don't need it screaming at me. Okay. And so let's go to bar charts real quickly and see if we can pull some references. We'll pay attention to this low. This is a low from September 2007. I'm using a continuous contract, and that low is 24.85. Once again, here's yesterday's low. I'm just using that. Okay, this is the closest low. This is a weekly low, and that low is 24.85. Also, I can see a bracket area where the market kind of bracketed. This is the high, so I'm going to use that as a zone. So this high is 24.88 half. 88 half. So I'll use that as a potential zone. So what do we got? 88 half to 85. There. That's also, I want to see if value can develop or overlap this zone. If so, we're trading lower, and where we will be back within this bracket area. And so the next low after that I'll pay attention to is 74. And then after 74, 45 half. 45 half, 74. So let me mark that on this chart. So that way I am prepared for just some downside references. So what do we say, 74? Okay, and 45 half. Oh, wow, this market has to really get weak to get down here, but We've been having some wicked volatility, and yesterday's range was about 100 points or so, if my memory serves me correctly. So we got some downside references to pay attention to, possible targets, or just something to use as a gauge for the to see whether or not the market is showing some conviction to the downside. And if we're in a trade, perhaps maybe we want to take that trade off or lighten up or whatever, so that we're just prepared. So we got some references that we're going to pay attention to coming into today. So you got any questions? You can rewind this video and see how I came up with those downside references. We got our upside references. I think we're armed. We have our strategy. We want to pay attention to value. Today could be a tricky day. First reference is this high volume. Where's value build in relation to that? We still got the spike base that you have to, and the spike rules that you have to keep in mind. We're above there. Value's unchanged. Keep that in mind. We can have some back and forth action. The only thing that negates lower value going into today is one time framing higher or a double distribution higher. If not, value is setting up to be clearly lower. So you want to possibly sell all rallies, but you have to be patient because of the volatility. We can get some wicked moves up or down. So hopefully you're on the right side of today's trade. This is Olawale Okabola with Spartacus Trading Corporation, hoping you can use this information to make some great trading decisions today. Take care, everybody.